Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Today's date is Thursday, November 12th, 2020. So take a look at the S&P 500. This is the daily chart. You can see we are falling today, down about 1.25% on the day on very light volume. I want to talk about something that I've discovered in the charts, and it gives you a good basis to know where the S&P could fall to before it hits major support. All right. So to do that, what I want us to do is first briefly talk about InTheMoneyStocks.com and just get you guys squared away. Don't forget, you can follow me on Twitter at Gareth Soloway. Also on InTheMoneyStocks.com, look for my name at the top of the website. There's a drop down underneath. There's Verified Investing, which is a service, and then Verified Options is a service. Verified Investing, swing trading stocks. We hold them overnight. So far this year, 188 closed out trades for over 1,600% net profit. And in the options alerts, I think we have about 145 closed out option swing trades this year for something like, 3,700%. So really a rock star year, folks. And again, the volatility has given us that. Now let's go back to the S&P 500. So what I discovered here is what I call bands, and basically it's a channel. But the channel has a tendency to work out really well. So what I can clearly see here is we have all this chop, and then you could see the big drop in 2018, in late 2018. Take that high pivot and connect it to the recent highs. And look at what you get, folks. This is so cool. So pivot high matches this high perfectly before the coronavirus collapse. And then look how we hit here, we pulled back, and now we hit up here based on Monday's gap higher. And I can zoom in a little bit. And then we reversed, and now we're starting to fall more. So that's something you want to pay attention to. All right, now, where could the downside target be? Obviously, we saw a pivot point here and so forth. To find that, we want to look for a parallel line that matches those key levels. And you can find that very easily by just looking at this. So, here was your big drop, and then you kind of fall into a range where you have these smaller dips. So what you want to do is you want to take those smaller dips, draw it to these smaller dips, and look at that. Pivot low, and then look, perfect pivot low right here on this pullback, and then right to this one as well. All right, now you might say, well, why aren't you using this downside move? Because both of these were kind of what we would refer to as outliers, which means they were abnormal for the market. So here you had the Federal Reserve threatening to raise rates, the markets collapsed. Here you had the COVID initial panic, which we saw this epic collapse on, and then the bounce back. Both of those you kind of scratch in terms of the regular range on the market. Now, if you get a panic again, then you're going to go through this range, just like we did here and here. But if you stay stationary and you just have run-of-the-mill kind of pullbacks like this one and this one, you would expect the SPY here, the S&P 500 daily chart, to come down to that level. And again, notice the parallel lines. It's amazing. They're perfectly parallel. And that's how you know you find something special, when you have multiple hits of a trend line, both on the upside and the downside, that are parallel lines. It tells you it's the range of the market. And the range of the market is very important for us as swing traders, because what it tells us is, and this is what I did, is I started shorting pretty heavily on this gap up into this level. And then as we've been pulling back, we can watch those profits start to mount. And again, if we come down here, then you could potentially look to go long for a bounce off of this level, maybe back to the highs. But again, at some point, I do think we break this range again on panic. I just don't know when that will be. But in the very least, it was a good shortable level, and your short-term target would be down here, which is back to about the 320-ish area on the SPY, which is really, in all fairness, it's about a 10% move down from where we currently are, and I do think that's a good possibility. So we'll continue to watch this, but I wanted to share this little bit of analysis with you because I think it is very helpful in understanding not only why the market gapped up on Monday on the COVID vaccine news from Pfizer, but then also why it sold off. I can't tell you how many average investors were scratching their heads as we were shorting the market and being in the money on trades here. And again, it's simply knowing these levels, understanding these levels, and profiting from these levels. So that's what we do here. Again, I give out my live trades to our members at InTheMoneyStocks.com. And again, if you're in verified investing alerts, swing trades on stocks. If you're in verified option alerts, swing trades on options. And again, we are in the money nicely just from a couple days ago from taking some positions. And that is always a benefit for me as well as my members. So again, folks, follow me on Twitter at Gareth Soloway or come to InTheMoneyStocks.com. Here is your S&P 500 analysis before you, and I wish you all the best day. Take care.